Welcome everyone, and thank you for joining us for How to Lead a Successful Shared Services Initiative. My name is Yazan Arroyo and I'm your moderator. Today's webinar is presented by Auxis. Auxis is a very different consulting and outsourcing firm comprised of former industry professionals who don't act like traditional consultants. Offering a customized, real-world, results-oriented approach, we become ingrained in our clients' culture and vision and truly dedicated to their success. Our depth of experience allows us to operate under a very different leverage model and maintain a focus on customization, flexibility, and bottom-line results at a very competitive cost structure. At this point, I'd like to introduce our featured speaker, Manny Cueto. Manny Cueto is the Vice President of Management Consulting for Auxis with more than 20 years experience in all aspects of global logistics, shared services and outsourcing operations, integrations, and strategy. He has extensive experience leading multiple business transformations through significant change across multiple and disparate geographies. In this webinar, Manny will present how to establish a solid shared services operation and how to drive the initiative to success. Before we begin, let me remind all participants we welcome your questions. Please submit them in your webinar panel at any time. We'll address your questions at the conclusion of the webinar. And with that, I'll turn it over to our speaker, Manny Cueto. Manny?
Great. Good afternoon, and thank you, Yaslin. And as Yaslin mentioned, I'm the Vice President for the Management Consulting practice here at Auxis, overseeing all aspects of our delivery services. A little bit of background to further what Yaslin mentioned earlier. I've been in consulting in one form or fashion, both internally and externally, over the last 20 years. And during these years, I've worked directly or been involved on a number of shared services initiatives, and have gained the experience and realization of not only what it takes to lead a successful shared service initiative, as well as what I call the backstage activities that are key to ensuring success. This webinar today I will share with you is very rich in information, so I hope you will learn a lot about it. In terms of the agenda for today, let me get to the, there we go. In terms of the agenda today, I'd like to start with taking a step back and taking a quick look on shared services in terms of challenges and trends, discuss a little bit about what shared service is and what it's not, describe some typical functions that are transitioned to shared services, and review some of the key benefits. Then I'll drive into a three-phase roadmap that I believe are the keys to a successful initiative in shared services. Then we'll go through a brief case study, and then lastly we'll discuss some of the key takeaways, and then I'll open it up for questions at that point in time. So to begin, if you start looking in today's economy, companies are faced more and more with pressures, either pressures coming from developing regions around the world that's creating pressures on the rest of the world on a company-to-company basis. If you look at it, customers have more and more choices than ever before in who they do business with, and there's very innovative companies that are rapidly changing the landscape of entire industries. And in order to stay competitive, that requires you to look at alternate ways, not only to operate and also to reinvest yourself and reinvent yourself as a company. In terms of some of the trends I think that are important kind of to level set around shared services, especially speaking to a proven model. If you look at Fortune 500 companies, there's an estimated 75% of those companies that interact in shared services in one form of another. With regards to Fortune 100 companies, that increases up to 85%. And these companies are mostly migrating to shared services in the area of finance, HR, and information and technology. There are other functions that I'll describe in a couple of minutes, such as customer service, logistics, or supply chain and purchasing, that many companies have also considered and actually moved to as well. I think what's important too, if you look at the last part of here, if you look at the resulting impact, there's a lot of CFOs on the hot seat today, and the hot seat is due to these increased pressures to look at alternate models. And what we're going to talk about today is shared services as an alternate model and the impact that it could have in terms of positive gains on an organization. When you look at shared services, many people talk of shared services in many forms, but if you look at the way the models are created, many organizations today operate either in a centralized or decentralized operation. If you look at the example here at a centralized operations, that's basically one finance and accounting function that supports multiple business units or locations, but they're really not set up in a way that provides arm's length approach to supporting the business, such as service levels and so forth. Typically, I see many companies in my experience that actually operate decentralized. So for every location, for every company, you have your own finance and accounting departments, you have your own HR departments, you have your own IT departments, and in many cases that causes a lot of lack of scale, if you will, to operate in terms of productivity and efficiencies. So when you bring in the concept of shared services, now you bring in a centralized location that really is geared at providing services in a standardized approach or standardized set of processes, but most importantly, they're managed by a set of service level agreements. Those service level agreements are around indicators that are created as a result of agreements between the shared service center and the individual locations or business units in terms of expectations and requirements from one side or the other. And if you look at what really is a shared service, I mentioned it's an organization that provides standardized processes that are more effective and efficient in terms of the standardization and consolidation of process, usually at a lower or reduced cost, and the ability to drive efficiencies across the service organization. And one of the key areas that benefits from shared service is the ability to adopt a consistent toolkit, if you will, across technologies and approaches to running and supporting the business that normally leads to the elimination of redundancies. What shared services is not, it's not a step towards centralization. Is what I mentioned before. It's about running an arm's length standalone organization that provides support functions and activities, but is basically driven by service level agreements. It's also not an attempt to hold operational responsibilities, in this case, for example, from a local entity, and it's not meant to become a negative impact on service levels or relationships with the customer. So if you ask, where can shared services be applied? I mentioned earlier that F&A, human resources, and information technology tend to be the top three functions that are typically formed under a shared services environment. Here's examples of various activities under those three functional areas, but at the same time there's other areas such as customer service, there's around supply chain purchasing, other types of logistics functions that tend themselves to operate in a shared services environment. By looking at, or the question comes out, what functions should be moved first? If you're looking at an example of lift and shift is an approach, and there's multiple approaches of moving towards a shared services. The most commonly used is lift and shift versus what I call fixed and shift. In lift and shift, you basically take the operations as is and you basically move them from an individual location into a centralized shared service operating environment, and as I mentioned, supported by service level agreements. But typically you want to start with the redundant transactional type activities, and some examples here such as accounts payable. There might be around credit management, master file maintenance, fixed assets, and then what you tend to want to do is go basically bring location by location. So you want to tendency to fix one location and move one location and then to another location. And ultimately, once you go through a location cycle, you go into kind of the more complex over time, and those are the decision support functions, and those are around analysis, usually analysis and reporting. And there's some here, as you see on the slide in front of you, some of the key areas usually around finance, financial planning analysis, a lot of the strategic planning, which in some cases, some organization keep them at the local level. Other organizations have a tendency to want to centralize or bring them under a shared services environment. Annual operating plan, budgeting, and reporting are other examples of decision support that once the transactional types of activities are in place, normalized or in stable operating mode, you look at future opportunities within decision support. If you look at some of the benefits, now if you really approached and properly implemented a shared service model, if you look at those benefits, examples allows you to concentrate on the core operation at the location or field level in the various business areas. I had mentioned the standardization of processes, I think is very key. Higher information consistency or visibility to information, greater span of control is also a key area. And obviously, as I mentioned, standardization as a rule of thumb allows you to yield greater productivity and efficiencies within an organization. Other areas include specialization. So if you're looking at a decentralized operation, as I earlier mentioned, there's usually a finance organization or an accounting organization, and this is just an example, where you have the same types of activities performed at multiple locations, which leads to a tendency to have less specialization or skills, as we usually find that multiple people tend to do multiple types of activities, which doesn't really allow for, in many cases, separation of responsibilities or separation of duties, as especially in mid-sized companies, individuals are basically formed because of the scale of their organization to do multiple activities and responsibilities. If you were to ask from an economic perspective and kind of what drives the business case, and we'll talk a little bit about the business case further down in this webinar, is if you take an example, if you're looking at a Latin America example, if you're looking at U.S. operations, you're looking at certain Latin America operations or businesses such as Brazil. Typically what drives the financials or the economics are around labor arbitrage, and that could lead anywhere between 25, 40, and even 50% savings just on labor alone. And as you move up the scale over time, we also find that many companies have the ability to increase their efficiencies, and that efficiency comes through, as I mentioned, the standardization of processes, the enhancements and strengthening of controls that allow you to generate a higher level of efficiencies. And by having specialization, that also adds to the ability to become more of an efficient operation. So it's usually two key areas that drive the economics into a business case for implementing a shared services, not just the labor side, but also by bringing activities under one core consolidated operations, which allows for the ability to build in operating efficiencies. Now what I'd like to get into is, as I mentioned earlier in the agenda, is talk about the three-phase approach or roadmap to implementing a successful initiative. Those three key areas, as you see in front of you, are around visioning and strategy. It's around standing up the operation, and then finally it's about optimization or a health check to improve upon a stable operating shared services environment. So if you look here now on the next slide, I'm introducing, as I mentioned, a three-phased approach, and this roadmap breaks it down into three key areas. If you look at the visioning area, it's all about understanding and bringing across executive sponsorship, if you will, but more importantly, business alignment. So it's just not corporate level alignment, but it's also bringing in field level alignment and making sure that all the T's are crossed, I's are dotted, that the organization is fully supportive and behind such a change. In this case, it really is a financial transformation type of change for an organization. But the key areas around visioning and strategy, as you see here in phase one, it's really all about building the business case, and that business case is based on a couple key areas. It's based on really understanding the key functions and processes and high-level opportunities for full-time equivalents to really bring or be hatcheted down in terms of generating savings, but also developing an operating model. Again, we'll talk about that in a minute, and that operating model or vision is around how a shared services will operate, the governance model that will support it, the activities and services of the shared services organization, as well as the retained or localized field operations and how they'll interact in terms of active guidelines to ensure that the services and the requirements that are set up through service level agreements are fully carried out. So at the end of the day, what you really want to push on in terms of strategy and vision is not just building a business case. In that business case, it's going to yield the results around net present values. If you're looking at savings, you're looking at all the costs to implement, and then ultimately you're looking at the payback in terms of time or the return on investment in terms of an IRR. If you move into step two, you're really looking at now is with the decision to move forward, now is really where the rubber meets the road. This is where the actual standing up or implementing a shared services happens. This is really where you get into deep design around process analysis, standard operating procedures. You really look at the implementing technology and the enablers or enabling technologies. You get into tax implications. You look at the organizational design or the organizational structure required to support and operate under a shared services environment, and then all the training and service level definitions and reporting in order to effectively operate a shared services center. And then lastly, as you go into phase three, once you're up and running, once you go through a hypercare phase of running, and that could be anywhere from 3 to 6 months, then you're typically ready to go through optimization. And at that point is how do you really build upon greater efficiencies? How do you continue to enhance your productivity? You look for other process improvements and things of that nature. And in some cases, some organizations already have a shared services. What they really are looking for is not just optimization, but a health check. And then that health check is really looking at when you went out and set forth building up a shared services, is your operating model, are those principles and guidelines and the governance that runs it, are they still in place? Are the SLAs still being focused on and being delivered on? Are the savings in place? Why or why not? So you're looking at all the drivers to ensure that your initial business case are really where you originally envisioned them to be, or really understand and identify the gaps for you can improve upon it and get back on a roadmap to your business case. Breaking down vision and strategy, it's got multiple steps here, but what's really I think important, it's a very key phase to set the path forward for decision making. As I mentioned earlier, it's really a combination of gaining alliance or strategic alignment within the organization at all levels, especially all the stakeholders that will be impacted, and it's really walking through and understanding the operation, the capabilities of the information technology organization, the capabilities and the activities of the individuals performing the services that you've identified for shared services, and using that type of information to develop a business case, a high-level roadmap, and really deliver it in the form of quantitative and qualitatively to the business, and including what's important too is where that location should be. So in many cases, if you have U.S. operations, you're looking at offshoring or nearshoring. Part of what a vision and strategy phase provides you is really understanding what are the candidate locations for where it makes best sense, whether it's continue to keep it in the United States or look at it, as I mentioned earlier, from benefits. There's between 25 and 50% of gains from savings from labor arbitrage if you were to look at Latin America countries to operate a shared services from. But typical deliveries around this phase is around the activity, the costing, the vision, and then part of that's key into this phase is really about identifying opportunities. And one of the things we do in principle as part of our efforts is not just look for opportunities within the framework of a shared services, but also looking at all the indirect opportunities that surround outside the core or the shell of a shared service environment and look for opportunities to improve upon the business itself. In many cases, those type of opportunities also support an overall a business case for change. If I go on to examples, on to the next slide, this is when we look, again, back on phase one, we're looking at the analysis part. We typically, and I'm going to go in some details on some of these in a couple of minutes, we get into the activities of what the individuals for the defined processes are. And an example you see on the board or the screen here is around accounting, and really understand where the focus areas and the time spent are with the individuals and the type of time. So if it's an accounts payable, is it typically a transactional type of responsibility or duty? If it's something more decision support that helps, lends itself to grow the business, or is it truly something we call a strategic, so something that actually enables growth? So we tend to look at the different types of activities in terms of the time spent and the kind of the nature of activities. We dive into the enabling technologies, the ERP systems. In many cases, we find companies that have multiple ERP systems. They have multiple other non-ERP systems that are either integrated or not integrated. In many cases, we find companies that are automated to a certain degree, but in many cases are manual, or in many cases it's a hybrid. Part of their processes are performed manually, and part of their processes are automated. And when you see manually, it's usually manual to get it into the ERP system, usually because lack of integration, and then the automation carries forth from there. Key areas around process maps, really understanding what are the drivers of the business and identifying the opportunities ultimately to lay out and paint a picture of what the future state of a shared services would look like. I mentioned earlier activity profile. Here's an example that talks about what an activity profile is. We basically, in what we do from the Auxis perspective, is we design a survey, and this survey it reflects normal operating activities at the process level. And if you look on the right side of the screen, you see several examples of multiple activities and then the descriptions that support those activities. And ultimately, the goal is to obtain a profile for the time spent by each employee on the different activities. And, for example, in many cases, we find many employees that, because of lack of specialization, lend themselves to performing a multitude of activities. And I can give you an example where I've seen organizations where 80% of their finance and account organization actually touches the closing process. So it's things like that that help us understand what people are doing and really dig in into what's driving that. So ultimately, we can help put together an operating model and a vision that supports, what are those best activities that lend themselves to operating under a shared services environment. Okay. If you go on to the next slide, we're looking at, and I mentioned earlier, location viability. What we follow is a multifaceted approach. It's really another activity that we perform, and it's based on a set of criteria, and these criteria are based on working with our experience and working with the clients, and it could be criteria such as cost of labor, availability of labor, it could be unemployment, it could be the political factor, it could be workforce, ease of doing business with a certain government or in a country. And another area that we add in here that's not listed is the strategic factor. In many cases, when we do our analysis, and we as I mentioned, it's a quantitative-driven approach, of which we've come up with a scoring or ranking mechanism, is where companies currently have existing operations. So, for example, if you're operating in the countries in Latin America, but you're not, let's say you're not operating in Venezuela, or you're not operating certain countries in Latin America, you're not operating in in the Southern Cone in some of those countries. The question is, do you really want to consider them for a location, a viable location or an alternate location to set up a shared services operation? And what we do here in this case is we add weight to these factors. So if the existing location is more important to you as a company, we would add more weight. If it's not, then we would consider the other criteria and not so much of a weight factor on the strategic aspects of it. Other areas that we look at, as mentioned here, we would look at government incentives. Ultimately, we end up looking at finalizing to a list of candidates, countries. It could be the top 3 where we start at that point performing interviews with local government investment agencies, references from other companies doing these types of operations, so that you get a really good deep understanding of the operations and then kind of the pros and cons and impacts of operating a shared services in there. You know, in the case of Auxis, we do a lot of work in Latin America, and many examples that or projects that we work with. We work with many multinationals that have operations within Latin America and the United States, and because of the region and kind of the cultural affinity, Latin America as a nearshore alternative makes a lot of sense for many of our customers. As we get into an example on the next step, it's a critical element for moving forward. I think I had mentioned earlier, it's really developing the operating framework, which really yields to the vision of really what sets the guardrails for moving the business forward in terms of driving key business alignment. And as I mentioned earlier, it's critical and it's very key for everyone to be on the same page. And what I mean by that, if you're looking at a shared services organization, what exactly are those activities? What's expected of a shared services organization? Not just the activities, but the types of services in terms of response times, volume metrics, and things of that nature. And then equally, the field level and the corporate level, what's expected of them, what will they be doing, and whether it's the field level, the corporate level. So everyone is clearly aligned with expectations of what one group is doing versus the other. And all this is really driven by a governance model, and that governance model is really composed of a couple key factors. One, as I continue to mention, is the management of service level agreements, and the other one is, as a standalone organization, do you want to implement as an organization any type of formal chargeback models? Do you want to put it into a budget and absorb it and consume the operation that way? So there's multiple approaches from a governance in terms of how the funding of a shared service operation can take place. Moving on, a key element, as in any organization, is the economics or the financial drivers within an investment, and the investment is around savings. So if the savings are just generated, usually, as I mentioned, due to labor arbitrage, you still have the expenses such as setup or implementation with regards to building out or lifting and shifting, the example I gave earlier in this presentation. But then you've got costs like severance costs, technology costs, travel costs. There's a slew of other costs that need to be taken into account to ultimately drive the economics. In this particular case, on the screen you see a 5-year model. That is all relative to what the client uses at their corporate finance level. We see clients that will use 5-year models, some that will use 10-year models, some that will use with terminal value, some without terminal value, some with growth, right? Revenue growth, some without revenue growth. All these are specific variables that are dictated at the company level or at the corporate financial level. Ultimately, what they're looking for is the NPV and the payback period. And we've got customers that are looking at the WACC, the weighted average cost of capital. In some cases, they're only looking at cost of capital. In other cases, they burden it with a risk factor, and they use a hurdle rate. So I've seen cost of capitals, be in the low single digits, and see hurdle rates to be high in the teens, high as 18-20%. Again, these are corporate variables that need to be dictated at the financial organizations of the companies. Once the business case is laid out. I think what's important, so what's next? It's really important if, from a multitude of locations, identifying the locations, the priority, and how to sequence the implementation from a location perspective. And that could be based on savings, or that could be based on locations that might have a lot of issues that you basically need to get at. Maybe it's because of fraud, maybe it's because of control issues, but they become priority locations that are impacting the ability to service the organization that you need to tend to the quickest. And the way we typically set up roadmaps, it's around process documentation, and that process documentation is around current state, future state of the organization. Then we build upon standard operating procedures. With those standard operating procedures leads us to desktop procedures, and that allows us to build upon the training guidelines, the training materials. Then we go through the hiring process, and that's when we get into that third step around the hiring, the staffing of the team, and then the whole migration process from the field level to a centralized location. And then that leads to going through what we call soft live, and that's still keeping the locations, field locations, closely involved, but ultimately we get to a hard start, or a hard go live, if you will, where now we go through several closing cycles. And again, I'm giving you a finance and accounting type example, which is through what we call a stabilization or hypercare. And why that's happening at the individual locations, you also need to take into account, you need a team behind the scenes that's working across the organization. You need HR deeply involved. It's very critical around recruiting, staffing, and the timing of that. And then you've got the legal and the tax implications that you're working with, and then ultimately ensuring that you've got a facility and that you're standing up and preparing that facility to take on a new organization within shared services. So here you see several objectives of the roadmap, but it's really around providing a detailed lift and shift and transition plan, and that includes an IT enabling technology plan. And when I see enabling technology, examples around that is imaging and workflow for the documentation. So if you're in accounts payable, how is it, the invoices usually come into the field location, and in many cases you need to scan them, they need to be indexed, and they need to go ultimately, in order to automate, increase productivities and efficiencies through some sort of workflow system. The next phase is around standing up the operation. So once you get past that whole visioning and strategy phase, and if the business case proves to be successful, the financials are in place, that the next step is what's it take to stand up a shared services organization. And what you see here is this approach lays out those steps. This is what we believe are the key steps, and this is really driven by strong PMO, or project management, that's required to be in place, and I'll hit on that in the next few minutes. But some of the key points here, it's all around the design around the business processes, design around the enabling technology, design around the organization, design around not just the organization but the headcount required, and that comes from the volume metrics. Also design around what's the best tax strategies in a shared service organization supporting multitude of locations. Now if you're in the United States, that would become a different conversation, but if you're looking at a Latin America type example where you have multitude of countries in Latin America, that becomes a challenge, and it's an area that needs to be tended to from the very beginning to really understand the impacts. And part of step one, which I didn't clearly mention, is the tax implications due to tax leakage and so forth is handled when you look at the strategic visioning and analysis step. But here, in standing up the operation, it's not only getting all the processes in place, it's getting the staff or the team in place, it's training that team, and going through a smooth transition of what we call shadowing, where you get the new SSC team working with the existing field locations, and over time learning the systems to the point where they're doing it on their own. That takes a lot of communication. It takes a lot of change management skills to ensure that everything is properly communicated, properly and timely communicated, and often. So frequency is very key here, and that's probably one of the key factors that I'll hit on at the end of today's webinar is about communication and keeping people or the teams fully informed. These are some examples over the next several slides. If you look at PMO, if you look at roles and responsibility, the PMO, the project management, is not just developing a project plan and managing the plan. There's a lot of key areas, and I'll hit on a few. Communications management, I cannot stress how important that is. Communicate, effectively communicate, ensure that the right players and the stakeholders are communicating in the right types of communication. So it's got to be important what you communicate, to who you communicate, and when you communicate it. Other key areas is risk management. You could really jeopardize a project like this if you're really not escalating issues, if you're really not in touch or closely involved with the organization. It could be from turnover or risk flight of individuals, but technology not being properly in place at the right time, the hiring of resources not properly identified and hired in time, things of that nature. Change management, how you manage this. If you look at it, how you manage it from typical change management, what are the needs, what are the requests, basically taking those requests and performing the analysis around those requests. What's the financial impact? What's the impact to the overall plan? What's the impact to information technology? What's the impact to the organization? And really get to an analysis that can be presented, that could be approved, and once approved, what's the plan in place to go implement that change, and then how is it ultimately going to be monitored and planned and controlled. So those are very key areas around change management. Some other tools around PMO. You look at the project charters. This is important to quickly communicate what the project's about. It really helps the team think through and discuss all the important aspects of the project before you actually embark and start performing the bulk of the work. Some of the key areas is around project scope, objectives, the way that success and it's going to be measured, important around the milestones, how they're going to be reached, the assumptions, and any kind of risk mitigation. Ensure that the roles and responsibilities that all the players on the team are clearly articulated and communicated. Here we have on the next slide risk management. I think this is a very vital consideration if you really want to effectively manage PMO. Here's an example. I touched on it before from the PMO perspective. You really want to ensure, especially in a project such as shared services, that it's smooth, that it's effective, and you really want to minimize any disruption to the business, but more importantly, you do not want to impact the customer or service to the customers while maintaining full control over a migration. And what you see here is an example that you want to lay out from the very beginning. You want to really place upon what's the likelihood, what's the impact to the business, and then if something of this nature in terms of a risk really came to life, what's going to be done about it? What's the strategy, and ultimately who's going to be responsible for following up and mitigating that risk? So that's key area in PMO, especially with the sensitivity of a project such as a shared services initiative. What you see on the, I'm going to show you briefly on the next couple pages. They're typical PMO activities. As I mentioned, you're going to have project plans, high-level timelines, and the plans are going to actually have the details around the plans. You're going to have the upcoming milestones and the activities when their due dates are coming up. So you manage really, and you're managing to milestones. You're going to have budgets in place. They're going to be travel budgets. They're going to be expense budgets and things of that nature that have to be closely monitored and closely controlled. There's deliverables at the end of the day that have to be managed to. Those, as I mentioned earlier, the milestones lead to the deliverables. They have to be tracked and they have to be communicated. We talked about issues log. We talked about change management and the very aspects of change management that's key. And ultimately, it's the communication plan. And communication, I cannot stress how important that communicating often and keeping the stakeholders informed in a timely basis is critical to the success of a project such as this. Governance. Governance is important because that's what's going to drive ultimately what the shared services organization is ultimately going to be held accountable for. We've hit upon service level agreements. It's important to also key upon key performance indicators within the organization. So that's more internal productivity factors that need to be put in place. I hit on charging mechanisms. How are costs going to be allocated? In fact, what's the appropriate mechanism? And then issue resolution, issue escalation. So if there are issues as you drive through and manage through these projects, what's the escalation process? Who needs to get involved? And ultimately, how are the issues going to be resolved? And lastly, is what I put here. Key is quality assurance. Is really as the milestones take place, as the deliverables come in place, they need to be validated. They need to be screened for the quality of the deliverables, and having a team that's involved that keys in on the quality aspects of a shared service initiative is very instrumental for the success of a project such as this. Here's some further examples. I have touched upon volumetrics, the IT. When you get into IT, that's where you really get into the deep dive. You really understand not just the enabling technology, but you really understand the ERP systems, the systems that are in place, the functionality, the capabilities, the features of the systems, because that's going to be key in understanding what future states of process are going to look like. It's also going to allow you to identify improvement areas around just redundancies, how you can integrate upon systems to eliminate manual process and develop automated process. And then the other key areas around volumetrics. Volumetrics is going to give you a sign for productivity. It's going to give you a baseline to understand the size of the organization, and then really help with the future opportunities for optimizing a shared services by having a baseline of information. And that goes by, the simple principle of you can't manage what you don't manage. So basically, if you don't have information, it's very difficult to manage. And in many companies, we see that it doesn't exist or it's very limited. So one of the things that's instrumental early on is start recording volumes. So that allows you to build a baseline to develop productivity and really build towards an organization that is building some sort of productivity targets. Migration. So once the whole process, the standard operating procedures, those are in place, it's important now to put together a plan and how are you going to migrate the organization. You've got the hiring process and you've got the job shadowing process. So that's really is what are the job profiles that you're looking for in the shared services, and then what exactly are you going to be doing with those individuals? When will you be hiring? Do you bring in a core team and then bring in the rest of the staff? And then the training. What is the training plan? And that training plan is an offspring of your standard operating procedures, your future state processes and operating model that allows you to develop guidelines for training, the materials for training. So you hire the individuals, they go through a shadowing process where they're really learning on the ground, hands-on with the individuals that are currently doing, and it's a combination with classroom training. That then leads to the ability to go to, I mentioned earlier, a soft go live where the new SSC staff is starting to actually perform transactions, but there's still a lot of oversight from the existing field locations, and usually go through several closing cycles to the point, and again, this is a finance and accounting example, to the point where they actually go to a hard go live and do it on their own. So really the learning process, it's heavily dependent on the constant interaction and communication, and as I mentioned, it's a mix of classroom and on-the-job training. The following slide gives you an example of what a transition plan would look for. This is an actual example. If you look at the various functions or activities, you're looking at the number of people that would be involved in that activity, and then basically a layout, if you will, of a chart of who's going to be doing what and when, and it goes through that process that I mentioned earlier. And what's important here is to build in flex time, and this is planning for the unexpected. So plans are plans, and everyone's going to do their best to manage to delivering on the time frames. But in many cases, we've come across organizations that something happens that's beyond anyone's control. So you have to be flexible and understanding that not everything happens in a picture-perfect, planned-out environment. You really want to ensure, what you're trying to get to is ensuring that the personnel that you bring on board into that shared services is truly ready to go live, and that's what I continue to mention from my previous slide, is there's got to be constant interaction, and you're going to learn a lot, not just in the classroom environment, but hands-on, on-the-job training as you shadow the existing staff that's in the field. And then the last phase, once you're really up and running and you see a level of stabilization in the organization, that's really where you come in and start looking for improvement upon the existing organization. We've seen many companies that struggle to identify cost and process opportunities. In many cases, that's because they're so ingrained in just day-to-day activities. In many cases, it behooves companies to have a third set of eyes within an organization or from the outside to come and help them really bring in what did we originally set forth in our operating vision and in our business case. Are we living up to the expectations of that business case? And then where are those gaps? And then what needs to be done to close that gaps to ensure you're on track? And some of the key areas that we encourage, it's really a passion around processes and metrics. And it's really with an end-to-end focused with the customer in mind. And it's key also not to mistake effort for results. You can work very hard, but if you're not delivering the results at the end of the day, it's not meeting up to the expectations. And then one key other area that I wanted to comment here is, in many cases, and I've personally seen this, where companies will take an existing bad process, call it a manual process, but nevertheless a bad process, and they go and try to automate a bad process. At the end of the day, a bad process is a bad process, whether it's manual or automated. So it's key to really identify the process and the opportunities and those involved in delivering upon those processes and activities. Let me now turn into a quick case study. This is a case study for PepsiCo and Latin America. Quick snapshot, very, very complex, and it runs across 46 countries in Latin America, over 77 bottling plants, as you see here, close to 3,000 SKUs, a multitude, in this case, 63 legal entities with 381 reporting entities. And they had multiple ERP systems. I think what's important here is, because of looking at the labor arbitrage, in this case is across the United States and Brazil, there was an IRR that delivered results that was greater than 40%, with a savings in labor arbitrage that was greater than 50%. So there was a solid business case that was implemented, and this is several years ago, and they're operating very stable and very efficiently to this day. But what's more important here, in addition to the economics I mentioned, is what drove the need for change. There was really strained operational issues around inefficiencies and a very ineffective organization. Scalability was very limited, and one of the key drivers of moving forward to assured services was around transaction processes, very high cost transaction process from a cost perspective, and that was due to a lack of standardization of processes across the region, driven by the redundancy and duplication of key activities. And then one of the other key areas was lack of visibility to reporting or information. It was either inefficient or inaccurate. So lack of visibility and having numerous countries trying to report back, trying to consolidate, that would be a challenging effort that became a very complex, frustrating situation. And that, in essence, led to the need to drive for change, and through their transformational effort in shared services, the end result was, in fact, a cost-effective operating platform that was scalable in nature and allowed the team to continue to support the Latin America organization, but would not necessarily continue just to throw bodies to support the business. And that's where the scalable aspects of it. Not only were they efficient because of the operating platform that was developed through the shared services environment, the ability to adapt to growth of the business didn't necessarily require needing headcount every time or full-time equivalents every time the business continued to grow. And then the other enabler was around business intelligence, and that came through master data management and at a centralized location in the shared services that allows them to standardize the data. And then lastly, another key area was around controls. You had an organization that had in excess of 400 controls. Part were automated, many were manual, and that was reduced as a result of a shared services to under 200 processes or controls rather. And as you can imagine, these were now centralized controls under one roof or one operation. So if you're looking at recapping, here's some of the key elements or success elements that we've come across over the years that we've been supporting shared service type operations. I would say the top 5 are the most important. Business alignment, I've mentioned several times throughout this webinar. It's important to have not only a sound business case, but have alignment and buy-in across all the stakeholders and businesses within the organization. And that includes the sponsorship. So when you go drive one of these projects, you've got to have a high level of executive sponsorship to ensure that the buy-in is there, and then from day one that everyone clearly understands this is a critical project driven from the highest echelons of the organization. Flexibility and communication, I'll touch on those two as the last ones here, but flexibility, not everything works, as I mentioned, in the perfect world. Plans are plans. You want to be able to manage as best as possible to the plans, but as anything, in the real world or circumstances and dynamics of the business that require you to change plan. And then ultimately communication. Make sure people know where you're doing, what's working, what's not working, what needs to be attended to, escalated, and so forth. But important that all stakeholders are communicated equally and on a frequent basis. So if I were to wrap this up and you were to say, Manny, what are those key takeaways that you should learn from this webinar? I've presented today a methodology or an approach. There's other ways of doing this. Other companies do it different ways. But my point is use a methodology that's been proven, that's effective, that works, and that's at the end of the day the results have been in place. You don't jump into just go make a decision and make the mistake that we need a shared service and we're just going to start shared services without really understanding and doing what I call that first phase, the vision and strategy. You really need to understand that the vision is there and that there's support for the strategy, that the business case is there, and that you're fully aware of what's that operating model that's going to support the go-forward operation of a shared services environment. I've done projects before where a shared services was already determined and the location was determined, only to be brought in to determine that the location yielded a multi-million negative net present value business case. And because of us performing that first phase of visioning and analysis, we were able to curtail an organization and prevent them from actually implementing something that was not the right thing to do. The next couple areas, it's around proper implementation. Planning is very key. And then the PMO. You've got to go deep with PMO. Having the right program management in place, the right work stream leads for project management. I talked about the roles and responsibilities. I gave you examples. Those are very key. Don't overlook those. Don't skip them. These are key elements that allow you to really deliver success within shared services. And then lastly, once you're up and running, you should be in a position, if you follow the points above from key takeaways, you should be in a position to expect the results that you built upon in your business case, and ultimately go into the last phase around optimization and really look upon gaps and improvement opportunities to even further enhance upon the efficiencies and productivities of the organization. With that, one more comment. If you're interested, by all means, from an Auxis perspective, please get a hold of myself, or you see Pedro Del Valle, his name is on the screen in front of you. We do offer complimentary opportunity assessments for shared services. So if there's any questions, or you just want to follow up with me, or believe it's something you're interested, please don't hesitate to reach out to either one of us. With that being said, I'm not sure if there's any questions. I'll open it up. Yaslin?
Yes, Manny, we have one question. Are there any business functions that typically do not work well for a shared services model?
Yeah, I mentioned earlier, the ones that what typically do work is around finance and accounting, around information technology, HR, customer service. What tends not to work are those types of functions and activities that need to remain at the local field location, the localized level. Those tend to be the marketing, those tends to be sales, those tends to be, even in finance and accounting, strategic type services that are tied directly or linked between the local organization and your customer base. Those tend to be the ones that you want to leave at the localized level and not consider for bringing together under a shared services model. Jaslyn?
Great. Thank you, Manny. There are no other questions here, so I want to thank you, Manny, again, and to all of our participants for joining us today. Please watch for our follow-up email with the replay link along with a copy of this presentation. Also, if you would please take a moment to complete our brief exit survey. And on behalf of Manny Cueto and the Auxis team, we thank you again and enjoy the rest of your day.